Good evening, everybody, and welcome to another edition of Live Market Analysis. My name is Carl Cumberland, and it's a pleasure to be joining you on a Monday night for our Live Market Analysis community get-together, where we talk about markets, we talk about trading, and I guess how to think about it, how to think about trading, how to manage your risk. Let us quickly talk about the disclaimer, which is also important. It says that everything we're going to discuss is general in nature, has to take into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Trading is risky. You're going to lose money at some stage. It's important that you do understand that. Ultimately, it's you and not I who's responsible for the stuff you choose to do. This is the format on Monday nights. There is another get-together done in a different format on Wednesdays, but this is what we do on Mondays. So ticker and market that you're trading in, for example, ASX, BHP, or MSFT on the NYSE. A few acronyms there. What type of setup is it? Continuation, turnaround, aggressive? Yeah, are we adding risk, maintaining risk, or subtracting risk? And what key levels are you watching? We know, how the model works, and then I can better tailor my response for you. But basically, any chart you can find, I'll do my best technical analysis reader on it. With that in mind, let's head over to our portfolio management model on the Nasdaq Composite Index. So really determining how much risk in the US that I can have using a FRP equals fully invested, full risk position. All my available cash that I'm ready to apply to the US can be taken up by risk positions in constituents. Could be 2/3, 66% invested, 33% cash, could be 50% where it is now. 50% invested, 50% cash. I think it's a pretty good place to be. You could be 0% invested and maybe even be happier. That's possible. But, over the last few weeks, we've seen some really great trends in the US, and many of those I suspect are probably still doing well, and you probably have done well even over the last few weeks. And that's why we can still be invested. That's why the model allows for it, because even in a sideways market, which let's face it, the Nasdaq has been going sideways pretty much since that risk or that supply side event on that day there in October, November, December, January, February, and now March. I mean, that is 5 months nearly to the day that the Nasdaq actually hasn't done anything at all. And look, for the most of that, we've been either 2/3 or half risk position. So I think it's been a pretty good place to be. The other half is in cash. It's earning 3-4% if you can get it. And if the market should fall, it's going to fall tonight. We know that. Cash allocation is only growing in its purchasing power, which is a wonderful thing. How much will it be down tonight? Well, if we head over here, look, how much is it going to be down in the open? We don't know how much it'll be down by the close, and that's kind of what matters. But that number's been shrinking all day. So it was about it was actually got up to 600 points that I saw early this afternoon. It's now under 300 points, or only 1%, as is often the case. A little bit of time goes past and investors get a little less shocked by shocking things. So we're going to open around about 20. Well, that's the futures, isn't it? So it's not the cash. But if we take around about 300 points, roughly, then what does that mean? It means that if we closed on Friday at 22,387, look, let's call it roughly 22,000 and some change. So we'll be challenging a couple of points of demand here, one big one here at 21,898, and of course the long-term downtrend ribbon will have a little bit more of a buffer there. We don't want to see it close beneath the long-term, did I say downtrend ribbon? Oh, that's a bit of a faux pas. Hopefully it doesn't come to fruition. The long-term uptrend ribbon, we don't want to see it close beneath there. Obviously we don't want to see that contract enough so that it starts to turn amber. I mean, these are all bad things. It usually leads to bad stuff when that occurs. And I know actually, look, there's one time it didn't. But I know I'm preaching to the converted. I don't have to express to the people on Monday nights the problems that can come with messing with the long-term trend ribbon. I mentioned in my evening wraps, what was it? We got to 12 out of 13 or 11 out of 13 demand-side candles demonstrating that there was demand coming in where we kind of expected there. Friday was not a good candle. It was a disappointing candle. And if today goes the way of Friday, yeah, it's got to get a bit sketchy. Let's just say that. So that's the analysis, if you could call that analysis. Things are getting sketchy. Do you really need me to talk about the short-term downtrend ribbon? And it's unbelievably good. Record now at telling us where dynamic supply is coming in like clockwork, and the long-term uptrend ribbon with dynamic demand is coming into the pincer move. We need to go one way or the other, don't we? So I think it's going to happen pretty quickly. That's the analysis. The accept is, well, we accept. We don't say, well, that's more often than not, and we don't do it. We go, that's more often than not, and we do it. We're good at that now. So the act is just, well, how do we manage our risk? 50-50, I think, is a good place to be. I did say in tonight's evening wrap, if I see a big black candle in the light, in the dark green zone, 2/3 would be the place to be. And that's 2/3 covers longs and shorts. A lot of people have this question. Hey, Carl, 2/3, is that just your longs? And can you add another third in terms of shorts? Hey, you can do it if you want. But no, that definitely covers longs and shorts. And you might say, Carl, if the market's going to crash, don't we want to load up on shorts? And I say, yeah, that's what your 1/3 is there for you to do. Often you're going to find there are very few longs anyway. They might take up 10% of the 33%, and that leaves you with 23% for shorts. Carl, come on, surely we can really load up. Back in the GFC, things were terrible, and you would have made a killing going short. Yes, you could have. Yes, I actually did do very well in that personally. I have fond memories of the GFC. Gosh, where is it? Oh God, I'm old. How many bars do you need to scroll back to get to the GFC now? But it wasn't that easy. It wasn't that simple. So look at the volatility in here. This is kind of the GFC as I remember it. Yes, it was good to go short. You kind of gloss over things in your mind. Yeah, I did really well shorting. I did. But there's so much volatility when markets are coming down. You think markets are volatile the way up. Generally, markets go up with lower volatility and come down with substantial volatility because there's so many investors out there. Ultimately, we have cash. We want to buy things that we think are value. We, them, who cares? There's still plenty of cash around. There's always cash around. There's always cash coming into the market, superannuation, pension, savings, things like that. So there's always a pool of buyers. There's always short covering as well. So shorts, they are very sort of edgy. They can be scared out of their positions, and you see big white candles covering back. The point is that 1/3 maximum is designed to just keep you out of what tends to be really choppy markets, even on the way down. And you get these bouts. So you can see in the GFC that the actual duration of time, I think this will prove the point, the actual duration of time where it was pretty easy to short was there, and then where? And then where else? There. So now how many months did that go for? 2008, that's a full 12, and I want to say something like 18 or 20 months off the top of my head from memory. Maybe it was a bit more than that if you go from top to bottom. But once we were, clearly beneath that long-term trend ribbon, look how little time you had to really, really clean up on your shorts. And the rest of it was just hard. It was hard for longs and for shorts. And when it's hard for longs and hard for shorts, as trend followers, what do you want to do? You want to have your minimum risk level, your maximum cash level. And all this time, your cash is still doing stuff, right? Cash is not a cop-out. This is what you have to remember. There's all saying cash is king, but that's flimsy. Cash is not a cop-out. Cash is not doing nothing. Cash is doing something. So hopefully that helps people understand. Let's add a little bit in there as well, isn't it? But that was, that was suitably brief as well. Thumbs up if you understand where I'm coming from, because I don't think I've really addressed that issue as specifically as that. And if you were wondering that as well, and that's the reason why. So I've got to keep something up my sleeve so that every Monday you can say, I learned something new today about the model. It doesn't happen that often. Adonis, you got something to say there, I think. I can hear you waiting to say something. I'm not sure if everybody can hear Adonis, but I can. Oh, wasn't you? Somebody else was yawning, was it? Who was that? Sorry, Dennis, I blamed you. All right, let's keep moving to the ASX 200. And Monday nights, it's cool. Hey, so if you want to, make noises in the background, I don't mind so much. Let's go to ASX 200, yes, and we're going to say what we're beneath. Hey, wait a second, what's going on here? We just made a record high a week ago. We were killing it compared to the Nasdaq. I mean, we were shooting the lights out, and on this day here, we didn't even go down, and the US markets tumbled on that day, and we were invincible. And who would have picked that the old tin pot would somehow beat the Nasdaq to close beneath its long-term trend ribbon? Thumbs up if you would have picked that. Thumbs down if you think that that was less likely to happen. How did we beat the Nasdaq to close? Where did that happen? Anyway, that's the old tin pot, isn't it, ladies and gentlemen? Up by the staircase, down by the elevator shaft. What do we do here? Look, we can't be full risk position. And, look, brave people will say, don't worry, Carl, it's fine. This is what markets do. Before long, it'll be fine again. It should be right, mate. Don't worry about, FRP and half RP and all this silliness, mate. Just do what I do. I call it the ostrich technique. I bury my sweet little head in the sand, and I just wait for the sandstorm to blow over. Right when it does, I pull my little head up and have a look around, and my portfolio's still there. Maybe in the olden days, in the new days where stuff's happening really, really quick, it might not be a great idea. The only problem with the ostrich technique, of course, is you do feel safe and secure with your head in the sand, but other more, let's say, delicate parts of your anatomy are still rather exposed. I'm going to go half RP on this one. It just means not adding risk for a while, and letting just stuff roll off. And disappointed in a few trades that were looking really, really good that didn't turn out probably the way I liked, but also comforted by the fact that there were some really nice shorts in there, and the triple O's, if you manage to pick up some of those, they've also done pretty well. So, and it just, you never know where that hedge is going to come from to cover your assets. While we're on that topic, OP, and then there it is there. How about the first up 42% today? All right, let's do the quick whip around the grounds to see if there are any red flags. I don't know if that's the right word this time. That could push us off our present half RP risk positions. I just want to check that one because that's the old value versus growth, and our value is going down as well. That's all that's confirming for me. Russell 2000, which was actually pretty strong, and that's usually a good sign. It's rolled over. Not the end of the world, but it's rolling. Stuff's confirming. Stuff's kind of making sense here. And the bloody VIX is going up, of course. Big breakdown in France. It wasn't just our market that was complacent, and our market, complacent's not the right word. It's just our market is just so narrow that 4 banks and 2 resource stocks went up, so we went up. We knew that. It wasn't it was not a surprise then. We've talked about lack of breadth. I've been talking about it for weeks. But I wonder, I don't know. I just don't know what the dealio was over there in France and Germany, but there's similar. My point here is, these markets didn't see that coming. Was it really that much of a surprise? That's the DAX. Let's go Zoom, normal, frustrating. You can sense the frustration in my voice. Euro Stoxx 50. So we've gone from nudging record highs in several jurisdictions to just having to wait a bit longer until we get that coordinated growth again. Hang Seng actually in the long-term trend ribbon's amber starting to break down. That's something we want to watch. Nikkei arguably has put in a bit of a cycle top there, at least for now. Nifty 50 in India, that's broken down. Shanghai Composite still okay. That one not though. I know I would have drawn those in not as a prediction, but simply as saying watch out. Just keep an eye out. We don't want to see that happening. And reiterating, we don't want to see that happening. So there are some question marks now. And did I forget to change that to the? Here we go. You can watch it live on Monday night. Old tin pot officially. Only you lot got to see that officially change back from the golden leprosy. Let's go to sectors. Let's get rid of some of this old stuff here. We don't need them anymore. Discretionary, train wreck. Energy looks good. Disappointing today, though. It couldn't hold the highs. Keep an eye on that, but I still think very much fine. Financials, disappointing, isn't it? That one altogether. Gold, there's problems there because we really shouldn't do stuff like that if we're in a sustainable, low volatility uptrend. Healthcare, what a train wreck, but at the same time, very tradable as well. And we should be glad that we have very solid trends like this to help us out. Technology down today, but I want to say that's more equilibrium now, at least in the short term. Technology again, materials. This is not just a gold problem, but it's also, I think, a bit of a resources problem now as well. Real estate rolling hard. Plenty of short trades have come up in that sector in ASX scans. Staples pulling back a bit. Telecommunications pulling back a bit. Utilities pulling back a bit. So let's actually I did check it late in the day, didn't I? And I haven't updated for today, but it was up a little. It was up a little today, 161, I think it closed. We're looking at lithium carbonate, obviously, and surprising me with its strength, because I would have thought it would be feeling greater ill effects from that move, but not to say it can't still happen. But I guess with oil prices spiking, it does support that lithium narrative to some extent. So apologies, I don't have the latest charts. I just haven't had time this evening to get to them. Let us have a look at base metals. I think this will be an interesting investigation here because typically when wars break out, that tends to be good for commodity prices. And we are seeing aluminium there make a new high. And your brain might then try and connect the dots and say, well, why am I resources stocks, getting belted today? Well, aluminium's up. They're not all reacting that way. Aluminium, copper, iron ore actually rallying. Nickel's still fine. Leads was down, but it was down anyway. Tin has pulled back a bit, and zinc down. So not a train wreck there, but the resources sector coming off harder, and it's just hot money. It's just fund flows, and basically, if you've made a lot of money in one area, and the entire market goes risk off, and you can no longer, support an investment in that area to the exclusion of other things like you've been doing, when it all has to go, that stuff's going to get hit hard because the profits there will help pay for the losses everywhere else, so that by the end of the quarter, you're not reporting a really bad result. Okay, you can still try and beat the market. So the best stuff tends to get hit pretty hard also. Let us head over to the Trading View screen and finish our whip around the grounds. I showed you the futures over there. Let's go over here and we'll start with gold. And I might go to this template with our various indicators on them. What do we say? Whoa. Plus, that's Coca-Cola. Okay, well, there you go. So that's an example of a defensive stock. I know this is off topic, but we looked at it last week and I don't think we had that candle. In fact, I know we wouldn't have had that candle because we wouldn't have said plus R. So we had that candle there. And then, you know what, it's a vent. Okay, we literally get the Middle East news coming out, and then we get a week of trading. And even the defensive stuff that was doing so well cannot withstand what it is. So I know in previous weeks at that 50-50 risk level, we'd potentially been lulled into this false sense of security. And the temptation there is to ignore that 50-50 level. But it's there for a reason. Trust me, look at me. It will keep you safe. And I can't say those things because ASIC will come down on me in a ton of bricks because apparently I present a danger to people if I should give them anything that resembles financial advice. Yet if I was selling real estate, ladies and gentlemen, I could tell you to buy any house in any suburb and put down as little as 2% equity. I could, couldn't I? And nobody would come and touch me at all. But if I told you to, manage your risk, then ASIC would come down on me like a ton of bricks. But my point was the portfolio management model will keep you safe, and I'm not allowed to say that, but I'm saying it. Let's go to silver, which is where I was going to go. Precious metals actually has done better than I thought here, but I still think this is cycle high, not changing my view on that one. Gold, I couldn't call this cycle high just yet. I said the trend was still pretty good. I think it's still pretty good, but this is starting to become a concern. If you see this, confirm this, it's going to be hard for even the diehards to keep the faith, yes or no? I think if you're a diehard, you're starting to feel a little bit of nerves come in because your brain's going, there's a war going on. Why isn't gold going up? Isn't gold supposed to go up? Well, if it's not going up when it's supposed to go up, that's usually a bad sign, ladies and gentlemen. It means people are selling into that strength. The big money is taking advantage of the dumb money still coming in on that narrative. The big money needs liquidity to get out, right? They'll probably even perpetuate the narrative. Who would think they would do something like that to pad their own pockets? Copper, not terrible. We have seen it come down. Why is aluminium going up? That's still very good. It must have something to do with what's going on in the Middle East. Iron ore is still very, very strong. Can't complain there. It didn't help BHP today. That's not the point, is my point. Uranium, fairly flat. Uranium stocks are all over the place, aren't they? Let's have a look at the energy complex. Not surprisingly, heading northward. That is Dutch natural gas. So obviously, with the straits of Hormuz blocked up, there's a lot of LNG that goes through there as well, heading in there. So we see LNG prices heading up. The situation is nowhere as bad in the US. I know that's gone up. You can see it's coming off a little bit. It's Brent crude. Well, that's coming off a little bit as well. Anyway, my point is the US energy picture tends to be a little bit more stable. Heating oil, but still an impact there. And this is the one that you want to watch. This is gasoline futures. So if we go back to, say, a monthly chart, and this is the taco trade here, right? So how high does this need to go before we get a taco? Where does it become politically unpalatable to keep what's happening in the Middle East drawing out? And this is the one you want to watch, right? This is what, plus or minus a margin, the Americans are paying at the Bowser for their gas. Keep an eye on that one. Brent crude, I said, what was it, about a week ago? I said, oh, look, it's gone up a bit, but it hasn't gone up that much. It's gone up more than a bit now. But I mean, will it hold? I don't know. Will it hold? To say that I'm yet to be convinced is too strong. I won't argue with what's happening. But I wonder if this is going to be more of a sustainable thing or a bit of a flash in the pan. I don't know yet, but happy to go with the trends while they're there. Coal is obviously going up as well because if you can't get LNG and you can't get oil, you've got to burn something to keep the lights on. But that's a different one there. That's the coking coal. Okay, we'll finish off with a quick look at the bond market and what is happening now. Obviously, in Australia, we've got this inflationary pulse. So we had it anyway. Interest rates were heading up anyway. So that's explaining why local rates are going up. And that is not good for the Australian stock market as well. And we tipped at 5% on the 10-year bonds, which is a pretty big deal. Where do we have to go back to see a 5 handle in the past? So we're going back, that's 2011, 2012, and it was on the way down there. So that's a long time. So that's pretty significant. We don't want to see those go much higher. And in the US, we're also seeing a bit of a rally back up, but not too sinister. This is simply inflation expectations. At this point in time, it's not de-dollarization or anything like that. So it's all inflation expectations. Okay, this last move. It's not a lack of faith in the US dollar. In fact, heading so probably moderating this move would be the fact that the US dollar inflows now to move into the safety of US treasuries. But it's all making sense to me. If there's something that doesn't make sense to you, point it out. Say, hey, Carl, explain why this is happening. And if I see anything that's really going to rock markets, liquidity crunch is something I'm always looking for, and I'm not seeing any of that. I'm seeing one thing right now that looks pretty localized. And historically, before the events of the weekend, or before the move on the weekend, I would have said interesting, but not knocking my socks off. I think I did say that. Now I'm saying a bit more interesting. Socks are loosened, but I'm just trying to put things into perspective. So for me, there's one clear threat. It hasn't spread. There's no contagion. There's no credit risk at this stage. And we can check those things. And I keep coming back to this idea of credit risk because that's the thing that would scare the pants off me. Okay, when you get counterparties not trusting counterparties, then we're in trouble, and we're not seeing that yet. So that's okay. Keep an eye on those two indices. That's why they're there. You might say, why the hell are those indices? That's your looking at your credit markets, counterparty risk, banking sector, systemic risk, and I've got a couple of other ones. No, I won't bore you. I'm sure you want to get to your request. So let's get to those. We'll head back here, and Mick's got a few to kick us off today. BML, get your requests coming in. I can see people are, which is wonderful. BML's the first one. Let's go candlesticks, and yeah, look, once again, like just actually finally, with all the volatility in this stock, was actually just starting to look good. And, you know, still volatile, but actually breaking out, starting to look good. And, well, we can't see it on the weekly chart, but it would have been, you know, somewhere up here. And there we go. Yep, so, and not a lot of price action on the way down. So what helps us is when we get stuff like this, you know. It just straight down and straight through here, unfortunately. And if we go, you know, minus R, obviously, on that, so close below that one. We've got a close beneath the short-term trend ribbon. We don't like that. The candles that delivered us those closes are not particularly inspiring. There are a lot of black candles in here anyway, isn't it? And this is just where that warning that I give you, just try and avoid. I know it might look like a steady uptrend, but even the sawtooth pattern we've talked so many times. I know it's hard because, you know, silver was going gangbusters, but there are good trends and then there are great trends. And the overlapping nature just speaks of just latent selling. And if you're trading this stock and you have to be watching the market depth, my guess is that you're seeing these sellers and their waves of selling, and you're wondering, why can't they just let it run? You know, silver's going up. Why? Because they don't care. They honestly don't care. They're in from such a great level, and they probably know the story well enough to know that they'll get another chance to buy it back cheaper. And the black candles are just constant selling, even as it's going up. Those things always concern me. Prevention is the best form of cure. But for now, yes, minus R there. Minus R, I reckon, on the close beneath the short-term trend ribbon, and the candles are uninspiring as well. It's hard for me to find a reason to still have any risk on this. I know it looked good. I know it's happened really quickly, and them's the breaks. I don't know if you noticed the market tanked. So, yeah, I'm leaning towards ZRP today, or like now, or very soon. Only saying that because, you know, a little bit of shadow. You might get, instead of getting out the open, you might just give it to the end of the day and see where it's trading, if there's a little bit of a bounce. Or get out the bulk of it and then maybe just keep a little to try and get a slightly better price, but maybe you're also just, you know, splitting hairs there. Let's get going. DYL, which I'm totally on board, that this one was far better than BML. There were far fewer. I'm not saying there weren't any black candles, but far fewer. The price action was much better. So here I am telling you that, well, to stick to something that has really good price action, stick to something that has far more white candles, and we ended up with the same result, didn't we? Oh well. But I can say more often than not, you'll be in a better shape if you do. I reckon this one fell faster than the other one. But yes, unfortunately, the only thing you could keep here is, you know, the kicker. You know, we do this on Wednesdays. It's just easy for people to understand. If you had 1,000 shares, you know, and you went minus 300, minus 300, just using round numbers, and you had that, that little 100 share lot that you kept for the long-term trend ribbon. That would be it here, and just maybe even just trying to get a better price on that one, but ZRP. And I think today's session is probably going to be a lot of this, isn't it? I don't think there's much any of us can do about it. It's just the way it is. Again, another chart actually that looked pretty good. So you're three there, Mick. I would have backed you on at least one of those. Maybe this one again is a little bit more black candle-ish. Is it fair to say that if you did a count on that day, and I did put it in on that day because I kind of can't not put it in on that day. Like I left it out for so long for all the reasons I've talked to you about, and then on that day it was like, well, I have to put it in today because I cannot take the risk that it breaks out tomorrow and not have it in my list. On that day, it's done enough, right? And not surprisingly, okay, that is how it works sometimes. But again, just watch the number of black candles. I mean, if you can count back the last 20 candles and you're counting 10 black candles, that's usually not ideal. I can't say any more than that here. I'm going to sound like a broken record today. Some people will be saying, well, surely you can hang on and wait for a bit of a bounce. You can. I'm not saying not to, but whilst the technicals are as we can see and no better, then it's just the prospect of staying in there for however long it takes to get a bit better. I'm not sure it's worth it. And then you really are betting on a quick resolution and a quick bounce. And prior to this event, markets were more prone to doing so in particular sectors. Pull back, rally again, everything's fine. This one might be the straw that breaks the camel's back and the dips stay dipping. I don't know, but maybe you've got a feeling on that as well. Let's go to some Mick saying or possibly minus 2/3 or ZRP. I agree. And the problem for you, Mick, and the problem for lots of us, not just you, is that you didn't get many candles to try and get that even a third out quicker. Here, I think, is where a third should come out. But even then, if you're getting out in today's open, like, so what? You're still dead. All right, you still died. And yes, but that is the nature of what we're seeing. It's not normal. We have done hundreds of these sessions, you and I, where we do case studies all bloody night about how you got early warning. You got out there, and now it's, look, we know that. There are going to be times, less often than not, where there's no warning and you just get smacked up. Welcome to the party. Sanjay questioning Zib on the 6th of March. I wonder if that's the 6th of March candle or the 6th of March update. So I think he was looking at ChartWatch ASX scans, which is on the market index site. So 6th of March, he's saying. So not that day. I mean, he's saying, well, let me read the comments so you know what we're on about here. The downtrend scan for close of business 6th of March does not include ZIP, which is below the short and long-term trend ribbon. Can you please cover in tonight's session? Okay, so the question is, should these scans, or if not the scans, over here and heading to the watch list, which you have access to these. If you don't, let me know, just send me an email and I'll send you the video tutorial, which I sent you when you first signed up. All right. Which you probably deleted the email and you never bothered to read the tutorial, but there's a video tutorial that shows you exactly how to get access to these. So maybe I'll include that in tonight's notification webinar, recording notification. How about that? So you have, yes, okay, I can do that. I was just thinking, okay, there are going to be people who haven't registered with me for Monday night that are going to want it. And I'm sorry if you're watching this and you haven't registered, these are closed. You can't get access to this community. I'm not taking any more people because it's too much work and I couldn't be bothered. So the people that are in, and if you're not in, bad luck. But the people who are in, you'll get access to this. And yes, you'll only get it in tonight's email, which you have to be in to get, if that made any sense if you're out. But the downtrends list, I guess, for close of business 6th also didn't show zip, is what Sanjay is saying. And just quickly back to here, just so we're on the same page, it would not have been, and let's go back and let's double check. So close of business on the 6th, which is the candle of the 6th, is going to be, well, that would have been this morning. So I know it wasn't in today. It wasn't in today. No. Okay, so confirming, just so I know what the hell it is that Sanjay's talking about, I can confirm that for the 6th candle and the addition that came out for the 6th candle, which would have been on the 9th, there was no signal there. And there's no signal today. It's not going in tomorrow's update either, Sanjay. And it might be confusing because we have a short-term downtrend, as Sanjay correctly points out. We're beneath the long-term trend ribbon. The trend ribbon is converging towards a downtrend, if it's not already close to very close to crossing. But we've had points of supply beneath the ribbon. The first time I would have run it as a short trade, everybody's letting me know. Thank you for that. I do appreciate it. Is here. That would have been maybe our first look at a short, I reckon. I probably would have put it on that day as well. That would not have worked out. But this last one probably would have. It seems to be meeting all the criteria. But those are the big picture stuff, Sanjay. We still need the fine picture stuff, okay? And we need to question whether that particular candle requires us to go short the next morning, okay? And what I like to do, I mean, if I can be around, generally like to see how it's trading around the open. If it's opened a bit higher and it's starting to come down, I'm happy to just enter at market, won't stress out too much. If I can't be there, or if it's down already, generally I'll be there the open, so I'll be able to see it. That's less often than the case. More often than the case, I can't be there. I'm busy. So I'll just take that low price there, which is 172.5, and whatever 2 pips is, in this case, a pip is half a cent. So 2 pips would be 171.5, and I set an on-stop order there. So if the market trades at 171.5 or lower, I'm in for my position, okay? If it doesn't, if it opens up and keeps going, let's say I had a signal on this day here, and actually I would have put it in, so 100% it would have gone in this day here. Yep, so that's a signal day. Would you have gone short on that day? No. Well, it opened up and it kept going, so even if you tuned in on that day, with it opening up that much, you would have just tuned out. So no point shorting that today, looks too good. You might have checked it at the end of the day to see if it had become a black candle, and then you could act upon your previous signal. This is stuff also we don't talk about very often, that maybe we should talk about more often, the actual practicalities of executing these trades. So if you can be around, we're looking for momentum in the direction of the signal. If you can't be around, then 2 pips beneath that low as an on-stop order. So it's an automated order with your broker. If the price gets to your level, it'll buy you into your trade, or sell you into your trade in this case. So in this signal, we wouldn't have entered. If we had that on-stop order there, it'd still be sitting there waiting to be executed. But Sanjay, on this day, all we can see is positive momentum on the daily candle. Okay, so I agree, all the other stuff is there, but without that momentum in the daily candle, then there must be something better on that day to short. So hopefully that answers your question, and a little bit more in terms of some of the practicalities. All right, those are the offline requests. Let's go to COH, where we're going to get another good example of a short trade, and that's the 4th, that's the 5th, that's the 6th. So as you can see there, that would have been a pretty decent day to where this one would have gone ahead of Zip. As a short trade, so not that it would have helped you out today. To be fair, that's a decent little short covering candle, isn't it? That one there on a day when the market got belted. That's a decent signal for me. Who asked me this question? I like your thinking. There you go, Evan. Yeah, that's meaningful, don't you reckon? Evan, thumbs up, thumbs down. I'm minus a third of risk. Obviously, I'm coming back here. Evan's agreeing with me. Yeah, I don't like that. That looks a bit fishy to me. So a few people agreeing. Yeah, so what we're seeing here, obviously, a bit of volatility. Not 10 times, but above average. And that's saying a lot given there's been a bit going on. But that volume today is looking very suspicious. It's not options expiry. I don't think there was any particular news today. We can check. And this is where market index. Ladies and gentlemen, I don't have any shares in market index, I can assure you, but they're really good people. They're clever people that created this website. And yeah, happy to contribute content. Let's go to COH. Very, very good people to work with and for. Let's go to no news there. Okay, so my point is something's very fishy. There was a fund manager today that looked at today's terrible set of news headlines coming in, the trends that were already in place, probably expecting that the fund managers who are piling out of this, fund managers who probably, should know better, remember the old, and, value investors who have taken a position and realising that that's just hurting them too much and maybe they need to stem some of the bleeding. And I know we're all feeling very sorry for them. But knowing that there are funds under pressure, these guys, they know what the other guys are doing, right? So knowing that there'd be some forced selling today, they thought this is actually a good place for us to cover back some of our position, because that's a bit weird, and just that full white candle. So not only the day were they buying at the open, and let's have a look. I'm going to go here, and it'll come back. I was looking for this. So the open is 169.11, and then an 8-cent move down. You can't even see a shadow there. 8-cent move down on $170 stock. And then the close is 180.17 off 180.18. That is some pretty committed buying throughout the day on a bad day. So I'm definitely minus 1/3 risk. So it's not shorting by a third, it's taking a third risk, a third of the risk off the table. Is it a strong enough candle in and of itself to do more than that? I want to say no. I think a little bit of confirmation is required. It's still a pretty damn good trend. If you wanted to do half, you could do half. But I think a little bit of skin in the game and just, having that ability to withstand a bit of a retracement to maybe get some more down the track, because, well, you can always get back into it, can't you? Let me say a third or a half. I still think this skin in the game warranted. I know you're going to do whatever you're going to do. You might go 2/3, you might go do the whole lot. I don't know. That's up to you. Okay, let's go to what would be driving it up from the... Oh, well, there you go. I just explained that one short covering. I should have read the rest of it. Let's go to tungsten is still going up. We'll post a chart on Facebook, says Robert. Please do. Now, Robert, one of the themes, always, hopefully there's a theme in every Monday conversation, is that it might not matter now, okay? So tungsten might keep going up, copper might go up, or aluminium might go up. So aluminium, South 32 is arguably one of the stocks on the ASX that has the biggest exposure to aluminium, also Rio Tinto. We saw aluminium look very good today, and yet Rio was hit the 3%, South 32 was hit 5%. It may not matter. Just understand you cannot peg yourself to a narrative when narratives don't work, and the time when they don't work is in times like this, okay, where stuff's getting sold, not for sensible reasons, aka your narratives, but because shit's just got to happen right now, okay? Shit's hitting the fan, which means shit's got to happen. Traders that are getting absolutely smashed to pieces, they're leveraged, they're fighting trends, or they were on the trend and just not quick enough to get out. They don't have a minus R system like us. Yeah, so we get out a bit, so that we're not feeling so bad after the third hit. They've copped that whole third hit, Robert. and they just want to, they're either having to get out or they're getting liquidated. Okay, so that's the other thing, is liquidations. Liquidations mean that no fundamental narrative is going to matter when things get like this. Okay, when you've got bonds getting sold off sharply, and you've got stocks getting sold off sharply, watch out, because you've got to think where that cash is going, right? It's coming out of anything that's not cash under the bed. So actually, let's put this into perspective. Right now, we've got gold going down, we've got stocks going down, and we've got bonds going down. What does that mean when all three of those asset classes are going down? Right, cash is going under the mattress, and people are getting out shotguns and sitting on that cash, right? Did I say earlier on I can't see anything too sinister going on? That thought only just occurred to me just then. Well, actually, gold, stocks, and bonds are all going down. Maybe it's a bit worse than I thought. Okay, let's go. What's the Facebook group? Says Sudesh. There's a Facebook group called Disciples of Demand and Supply. It's for people who attend. I didn't make it. Robert made it. I did become a member. I apologise. I don't do much posting on there, if any, because I'm so busy, Robert. I apologise. But Robert does a great job in keeping it going. And everybody, public service announcement, just hit Robert up on Facebook. I'm sure he'll put a link. Well, I think he already has put a link in somewhere. Okay, let's go to Nicola. Nicola's got EOS, seems to be holding its ground. Yeah, and that's a really great observation, Nicola. That's what I thought today. So I put it in tonight as a plus R. It's a little bit cheeky. It didn't make feature, but it did go in as a plus R. Let's get rid of some of this stuff. I thought that was a really interesting candle, much like that Cochlear is a really interesting candle, and it got sold off, but it came back really well. Like you say, holding its ground, I think you said, holding up for now, heading for an area of supply, correct. Yes, it's in the shadow of this. But that's another reason why I thought, that's impressive. It is in the shadow of that, and it seemed to do really well today. So, yes, this, I can see a path to plus R. Wasn't confident enough to promote it to a feature chart. But yes, I agree with you on that one. And it helps that it's a defence stock, and I know narratives, but the other ones, ELS, look at that. That is feature. So this is a great little segue or juxtaposition, if you prefer, between two defence stocks, but one which made feature and one didn't, but was still a plus R. So I won't annotate that one because I think that's the most obvious chart on the planet right now. Yes, if there's... no, I don't think so. So the second part of Nicola's comment is getting ready to take 1/3 off the table. I don't think so, unless you see an almighty big supply candle there. So if you saw something like that, certainly like that, not even like that. I don't even think that's that bad. I know it ended up being bad, but on the day, it's not so bad. Only if you saw that up there. Yes, there's supply up there. It's clear as day. We all know. We can read a chart. But I would put to you that it's had a decent go at working through that supply. It's chipping away at it. I mean, let's have a look on this day. How much damage did it do? Well, it's a bit early on that day. A little bit on that day. Chipped away at it. Above average volume, chipping away. I would say that next time it gets close to there, we're not thinking about minus a third. If we're closing with a strong candle, I think we're more thinking about adding a third. Okay, let's go to Sigma for George. I'm glad you asked about this one. So this one came up today in the shorts, and I haven't finished my feature charts yet. I got as far as the shortlist. But I reckon I'm going to put this in as a feature. Yes, I think that's worth a go. It's early stage, but I like in terms of getting the mix of setups to have a crack at these things. And it's interesting, very defensive company as well, right? Pharmacies. But I do like to try and get into these setups at this stage. Nice and early. I don't know what's going to happen next, but I think that's really interesting. So I think I will go feature on that one. I think we're going to feature that one. So I'll go through the list and I'll just do what I normally do. And you can't see what happens when I right click here on screen, but I get a little option and I can add watch list, and I just go add the select symbol to the next list below it, and you can see now 360's gone in there. So this is my process. I've obviously gone through a scan. So the scan is this many stocks, and I'll go through each of those. I won't do this, right? But for example, Sanjay, that didn't get shortlisted. Now that looks really terrible, doesn't it? I mean, it looks like one of the most obvious shorts you can get, yet it didn't get shortlisted because it looks like the most obvious short you can get until you see the ones I did shortlist. Okay, and the reason why that didn't go in, and we looked at your zip example before, that didn't go in for a short because it had a white candle. Well, this one didn't go in for a short, and it's got a black candle, but it's got a downward pointing shadow. So for me, I say, well, there's a bit of demand in there. It's too hard. You know, show me something where there was actually no demand at the end. So 360 went in, but A4N didn't. And then, you know, we go through the list. That one didn't go in, downward pointing shadows. And I end up with this list here. And now it's a matter of seeing there's a little bit of a downward pointing shadow there. I get it. I'm not being a hypocrite, but the length of the candle is so big, you cannot deny that one. Let's go to Amcor, bit of a downward pointing shadow there as well, but again, it's so big, you cannot deny that. I did think long and hard about this one, and I'm going to take it out. I don't think there's that much. I don't think we're desperate for that one, are we? I'm going to take it out. Yeah, too hard buzz. There's plenty of other stuff. Even that one. I haven't done this yet. Like I said, I haven't done this process where I go through my shortlist and just double check them for my sanity. So let's do that one. Let's remove that one. It's just checking the process. For longs, I would do the same. I think that one stays in. That one's horrific. Obviously, that one stays in. That one stays in. That one definitely stays in. That's terrible. That one stays in. So I might just do the double work here and also find ones that I would promote to feature chart for tomorrow. That one's not because it's got a little bit of a shadow, so you can see the differentiation there. So it won't go feature. That's just so bad. I have to put that in. So that'll go feature. That'll go feature. These are horrific. So I'm just right-clicking and putting them into the list down here. You can see. Beacon. Yeah, but it's not going to make feature. There's just no downside volatility. Okay, yes, it looks horrific. Yes, it closed at the low. And if you shorted this tomorrow, no complaints at all. But it just doesn't have that impetus, that downside volatility that some of the other ones have had. And I want to try and find the best of the best here. So reverse everything I'm telling you to go from shortlist to the features on the long side. Yes, a little bit of a downward pointing shadow. Just got a bit of demand here that I'm afraid might hold things up. So I don't feel the desperation to put that in, but it's very strong. Hey, they're all here because they're strong. This one's a bit of a gap and run, which I do like. It's also very early. It's got a little bit of a downward shadow, but that downward shadow, when you add back the rest of this candle and make that black, is very small. So for me, just that gap and run is very attractive. I'm going to feature that one. This one's got a little downward pointing shadow. I think this is very close. It's got a bit of momentum to it. It's got a bit of impetus, doesn't it? There's a bit of motive, and a bit of a motive nature to it compared to some of the other ones. That downward shadow is just going to keep it out. It's so close. It's line ball, and sometimes there's a bit of discretion. That one is terrible as well, but it's going to stay out just on the basis of that little bit of a downward shadow. But if you shorted CSL, hey, no complaints. This one's, again, strong. It's motive. That's always good. Bit of volume coming in, bit of supply engagement. But I'm just concerned that this might hold things up a little bit, that point of demand. So, I could always put it in the next day. This one's pretty much broken the point of demand. A little bit of movement there. That's pretty interesting. It's got a volume pulse. I'd put that in. I'm tempted to put that in as well. It's got a bit of movement about it. I can't really see the volume. I might just leave it out. There's a bit of a point of demand there. Maybe it's not that exciting. Geez, that one looks pretty solid. Volume pulse as well. We don't have to be too pedantic about things. That one's horrific. I've put it in so many times. There's a bit of a point of demand there. I might just leave that one out. Not because it doesn't look bad, it does, but I just don't think it's got as much urgency as some of these other ones. That looks horrific. The next point of demand, look, it's here, but it's probably here, so I think there's plenty of room on that one. A little bit of a downward pointing shadow, might leave that one out, but of course it's horrific. That it's too hard anyway. Oh, almost this one, a bit too hard there as well, just on that point of demand. That one's looks very strong, doesn't it? But it is approaching a bit of a point of demand also. But geez, that's a wipeout. That's so solid. Geez, it's heading there with some real momentum. I'm going to put that in anyway. That one's just horrific. Gap and run as well. That looks pretty awful as well. And I know sometimes you just get lists where they just all look bad. Novonics, look, I probably should put it in, but it's just so slow. PFP, my gosh, it's supposed to be a defensive stock. That's unraveling. Oh, that looks pretty bad as well. Oh, that should really go in. You can see how tough this is. Again, it's a shortlist, so I want to try and shortlist. That probably should go in as well. A little bit of downward pointing shadow, but that is horrific. Downward pointing shadow there, we'll just keep it out. Rest mentees, a little bit of a gap and run. Volume as well. Same on that one. And I'm doing my best to keep stuff out, right, if there's any doubt. And that's Sigma going into tomorrow's features. And that's a bit of a downward pointing shadow. And then I'll have that second list now, and now I'll go through this like I did on the last one. Is there anything that should have been kicked down? I don't think I saw actually anything. I know I was focusing more on features, but I don't think I saw anything else that we probably could have said actually doesn't deserve to be here. I know we kicked a few out at the start, but actually, no, they were either bad or terrible, weren't they? The rest of that bunch, so they were in the right place. And now we're just kind of looking here, you know, can we take that one out? Is it a bit slow? It's pretty damn solid, and I think we're going to struggle to kick any of these out. I'm looking at, again, that downward pointing shadow, but then I have to, in my brain, put that back in. Oh, could you be bothered on that one? It's hard to see the volume, but it is above average. I mean, maybe I'll kick that one out just on the basis that now in our minds we know what's really good and what's maybe not as good. So I don't think there's any harm maybe just kicking that one out of the of that final list. I don't think we're going to lose any sleep on that, in the interest of making this list as short as possible. There's some really, really bad stuff. All right, so I ended up with that many, and yeah, well, you'll see them in the appropriate place in tomorrow's scans. So a little bit of, I guess, how-to there on how to do a scan, how to shortlist the scan, what I'm looking for in shorts, like what a great time to do it. I mean, we could have done the longs, but I think better off doing the shorts. And if you're wondering about the longs, just turn everything I said on its head. So we started down that path because we're talking about SIG, and hopefully I don't need to say anything more about SIG. I think I've answered that question both in terms of, is it a short? I think it is a minus R. I think it's a plus R. I'm going to get that right. Plus R in terms of we're adding risk to the short side. Correct. I know on Wednesdays I might say minus R on that one because they're not thinking about shorts. They're going, if I had it, I would sell it. Okay, so we know differently here. And that's exactly what George is asking about. Coincidentally, the next two George had was RMD. So that's a feature for me tomorrow, and you saw how I went through the process. Now, I'm curious about the other one, NXT, because NXT, you also noticed, didn't make either of my lists. Actually, go here, because what we've got tonight is great. So normally I'll delete these when I'm done. I just haven't had a chance tonight. So is NXT in the scan list? And it is. So it's in the scan list. So this is really good, George. Okay. So we're seeing all three layers now. This didn't make the scan list, ladies and gentlemen. This didn't make the short list. Then it didn't make the short list and short list. And then it didn't make the short list and short list. And then it didn't make the short list and short list. Like, you can see the effort and the work that I go through to produce those articles for you each day. And it takes a substantial amount of time. I do it after I get home. This is when I would be doing my own analysis anyway. So it's not during, quote unquote work time. But the process is interesting in that this didn't make even the shortlist. Now, why? We talked about the consideration of previous points of demand where they've accumulated and how they might get held up there. So I'm trying to find, hopefully, George, you can see the ones that did get in, they're moving, their motive, they're happening. Now, this one I think looks very interesting, but am I desperate to do it today? And I can see why you would. Don't get me wrong, that's why it made the initial first pass. Without a doubt, it gets in the first pass. And today's candle is very solid as well. Upward pointing shadow. So gap down, tried to rally, found supply, came down, closed near the low. A little bit of a downward pointing shadow, but not major. Above average volume, slightly above average volatility. So yes, if you wanted to go plus R on this for a short, no complaints at all. I felt that the urgency wasn't quite there, and that's all. And if we see another candle tomorrow, maybe one that closes, because this is quite a strong point of demand here. So we can see there were fund managers who thought that 1250 was cheap for Nextdc. Okay, and some of them will be saying, if it gets back to 1250, that's where we'll start buying again. Okay, they're value investors. They don't think like us. They think 1250 is cheap. Their model, and that's probably why, ladies and gentlemen, it probably stopped going down, because some fund manager had been waiting. They didn't buy it this time, or whatever. They refused to buy it here, and they've always thought that, if it gets back to 1250, then we'll buy some. And they've stopped the rot. And they were active there, and they might be active there again. But if I can get down here and I can print a candle that looks like this, what is that going to tell me about their mentality and their desire, their motivation and the size that they have? So for you there, George, if I see a candle like that, then this gets shortlisted, you know what I'm saying? And it probably gets shortlisted. But right now, I can see why you would do it, but I also can't it's close, but can't quite see the motivation just yet, or the urgency, not the motivation, the urgency just yet. A little bit subtle, a little bit nuanced. Hopefully this is working for you. Hopefully this is value to you, but interesting little insights there into what gets the candies or not. Let's go to Jared, who's got, and what's the time? It's late, so I'm going to pick up the pace. PC2, which is not that one. It won't show up in these lists, of course. I need to go to the full list. Okay, wonderful. Thank goodness. A deep sigh. Jared, your stock got belted today. Why is it a deep sigh? Because this is actually relatively early warning, isn't it? This is one where you see me do them on Wednesdays as a case study, and I'll say, well, this was the candle where we would have done minus R, okay? So for me, this is the candle where we do minus R. Thank goodness, it's still a 20% decline, but we've seen some today that are substantially worse, relatively speaking. Early warning, yes, so 100% for me, no questions, no doubts about it. Every reason to minus R. In fact, the size of that candle, plus the fact it's beneath the last point of demand, for me, would put it in the 2R, minus 2R category, I think, and happy to hold a third. Actually, very happy to hold a third on that basis, but just taking some precautions there. Great example of the $1. Well, there you go. I didn't even notice. So if you're following my model, like my model says it's compulsory, do not pass go, but collect $200. You have to sell a third within, generally within 0.5% of that level. So, what is it? Like a 99, 99.5. 1% to 0.5% of that level would be good. So, yes, and then you really should wait until a close above the signal before you add that back in. So you would have probably have got out some already, and then maybe this is the balance here. He's saying he missed minus R. Now I've answered that question. That's a bit of a costly miss there, Jared. Robert saying Peter created the Facebook site. He just lives there. Okay, sorry. Apologies to Peter, who I got mixed up. US stocks NOC. Yep, we're heading there now, and we're going to finish off with Haraju at T92, which I'm guessing is not looking too good. What? The uranium stock that's going up. Yes, well, continuation equals R. I think so. A bit of a shadow, but it was a pretty horrible day everywhere else. I don't know, mate. I reckon, it's close. Jeez, it's line ball. Look, equals R or minus R. That's what we're talking about, isn't it? And it depends on how you're feeling. You can sort of see how this mentality of using the good ones to pay for your losses comes into it. So there are going to be traders out there that something goes up, they don't ask questions, they just get the hell out because they're losing so badly everywhere else. I don't know, Haraju. I don't want to be a cop out on this one, or cop out on this one. It's I'm going to call it. I'm going to go minus R. Yeah, I'm going to go minus R on that one. Let's go ELS. Well, we've talked about ELS, haven't we? That's impeccable. It's the best chart I can see. And I don't know what's going to happen tomorrow. It could be the worst one tomorrow, but that's the best one I can see today. Okay, let's head over to the back to the AMI broker window, and we're going to whiz through the US ones. We've got Northrop Grumman, if I'm not mistaken. There we go, NOC. So obviously defence company trading as a defence company would when there's a war on anywhere around the world, of course, but particularly one, I guess, that the US is involved in. Yes. So yes, for me, if you're looking to add risk to that horrific Nasdaq chart that we saw before, no complaints. Do you really need to add risk? Because sometimes you can be a bit too much of a smarty pants as well and say, there's a war on, better buy defence stocks, and then the war stops. Wouldn't that be a wonderful thing too, by the way? I shouldn't say it as in it's a bad thing. All right, so Northrop's best friend, best buddy is obviously RTX. These are the guys that, yep, they both. So, yeah, there's obviously an ESG element as well. Both of these companies do design things that blow people up. So if you're okay with that. So it's called, is it called LMT is the other one, Lockheed. So is it called RTX? I didn't even know they changed it from Raytheon, but I'm 99.9% sure. So Robert, you gave me this one. Just thumbs up that RTX is Raytheon. They've just changed the name because perhaps Raytheon sounds too much like Cyberdyne Systems. So we've gone to RTX, it's a little bit more vague. It's a bloody good looking chart, isn't it? So yeah, if you don't have any issues with what they do, plus R equals R, happy days for those involved in war mongering. There we go. And LMT, no coincidence. And if you're not familiar with what these codes are, as I am, you know they're generally mentioned together. Lockheed Martin. Plus R equals R as well. If you take all three, you've got a highly correlated trade. Don't think you've got three different trades, you've got one trade. Yeah, don't think I've gone plus R, plus R, plus R, spread my risk. No, you've got one full R in those three if you take them all. Just scrolling back up the list now, folks, and I think we're going to finish with Adonis as we tend to do. XOM, Exxon Mobil. Now, another company that might well benefit from the war, but as far as I know, don't blow any people up in the process. The last few candles are uninspiring, particularly given the positive impetus. However, this chart hasn't reacted to the price move of crude oil over the weekend, so you may actually see a gap higher and moves. That's something to consider as well, Adonis, if you're not in it, obviously. I don't know, given how the oil price has pulled back as it has, you want to sort of enter on that gap because you might find that there's short covering shorts and things like that push it up at the open, or just, Johnny come latelys narrative buying, and then the sellers can take advantage of the liquidity and come back in. So just, I'd say, have a look at it towards the end of the day, and if it finishes with a nice white candle, then everything else in the trend is good. I would question, however, some of those black candles towards the end there. So we're not seeing the perfect 10 out of 10 chart, but it's very strong. And look at this, it's so funny. Robert gave us the three defence names there, and we're getting two of the energy names here. I'd say Chevron for me looks better. I think you're on that one from memory. We can see that the scratchings there from before. So that one looks much better, and that'll obviously open a bit higher today as well. So happy to just copy paste on that one. Next to Manside candle, I still think obviously with the little bit of an upward pointing shadow on that last one. And that concludes proceedings for this evening. Interesting one, wasn't it? I don't think we've had one like that for a little while. Hopefully it's worth your while turning up and listening for an hour. Looks that way. People seem to be giving me the right emojis. And yeah, interesting time. Don't feel like, look, I know I've been there, and the general, there's excitement as trade, because you lot are now seeing the market very differently from your average mum and dad. Number one, who are shit scared because their portfolios got smacked up today. Not to say that your stuff didn't get smacked up, but you're kind of more systematic about it. It's okay, that stuff lost. Got to trim risk here. Got to do this. Get capital ready to redeploy. What are the good trends? I need to be thinking about shorts as well. I mean, you guys and girls. Sorry, I have to be careful. I know you're looking at this market with excitement now, and that's good, because it's like you've got the training wheels are off. You've been doing this for a while. You can see it works. But at the same time, those portfolio management models are there based upon my experience of not this exciting market, but 20, 30 of these types of markets that I've seen before. And I've been there, I've been excited, had a lot of success in the great trends that came up to these times, and even have longs and shorts and still probably not come out of it as well as I should have, simply because I overtraded. I did too much. And I think one of the first things I said to you at the start of today's session was that cash is not a cop-out. Cash is not doing nothing. Cash is a position. Cash is a strategic position. So one way to do it is to really pare back your risk. So, I typically will use like a 1% model of my capital. You might bring that back down to 0.5% and so do more trades to scratch your itch, longs and shorts, but at half the size, so that you still have your limits, but you're getting more trades in, or more exposure, and scratching your itch. So hopefully that advice ends up being of some value to you. And we'll be back next week. It's not that long, another 5 trading days, and we'll have another chat about it. Until then, all the best for your trading. Bye bye for now.